Hello, everybody. This is Jason here with Level Head Trading, giving you my technical analysis on Tesla. This is week, um, the weekly ending video for Tesla. So, I'm going to just jump right in there. Start off with the daily, then go to the weekly, and then more recently, I added the 2 week chart because I think that's something that's of value to look at. So here we have on the daily chart. This was Friday's action. So you broke above Thursday and then you closed right back down near the lows of Thursday. So Thursday's lows was 173.70, and today we finished at on Friday. I'm sorry, we finished at 175.34. So that's a pretty notable change in direction just for that day. You started off strong, but you ended up, right back down in the low zone. So that's pretty much how the daily chart. I'm not going to focus too much on the daily chart right now because it's clear that we're just in a daily downtrend again and a weekly downtrend. So now let's just go to the weekly chart and focus more on that, and then I'll show you what I'm looking at on the 2 week chart, which I brought up in my last video. So here is the weekly chart, and again, that turned out to be a weekly bear flag. The prior 5-6 weeks, that was a bear flag. So again, just briefly mentioning, here's the 12-period exponential line. The previous week, you reached up close to it, and then all of last week was just straight downhill. So that's how the weekly candle looks, and that's the finish of the week, right at the lows, pretty much of the entire week. So no sign of any buyers right here. So what do we look at next? So in the RSI, so on the weekly chart on the RSI, again, I'll bring up that up here at the high, you reached a 70. So in a very strong trend, 70 generally will make the top. If you're not going extreme, 70 is considered right at the top range of being overbought, or in the beginning cycles of being overbought. And but you got to consider where you came from. So here, another point on the weekly chart, on the lows back at this point here, which was the lowest of lows, 101.81, the RSI was at 27. So you went from 27 to 70. That was the top, and now we're cycling back down. So the current weekly RSI is at 36.71. So now it looks like we are going to go to oversold conditions on the weekly chart. Where is support? So I wouldn't even really call this support, but the last monthly higher low was 152.37, which is right here. So you have a little bit of action on those weeks, building the price back up and going up to that area. So that is all you have really as the next level, 152.37. But I'm going to say it, I don't think that's going to hold anymore. I don't think, I'll just go into what I'm looking at. So I'm thinking we're going to go oversold on the weekly chart. That, in order for that to happen, that's probably going to push at least to this area of 150 psychological, and then we'll see how it turns out after that. So now just jumping to the 2 week chart, I made a mistake. I put it in the comments. I kept saying when I was looking at the 2 week chart, which I'll go to next, that I was looking at the 200-week moving average, but that was actually the 202-week moving average. This is the 200-week moving average, and there's the moving average up above. So when I go now to the 2 week chart, it's the 2 week 200 moving average. So it's the last 202 weeks of time. So let's just jump into the 2 week chart. And this is what I'm really kind of basing everything off of now. So on the 2 week chart, it's the same numbers. This is the one. No, I'm sorry, it's not the same numbers. This is the 152.37, and then this is the low of 101.81. So on the weekly chart, we have the 200 week moving average above current prices. The 2 week the 2 week 200 moving average is down here. Right now, currently, it's about 121. It has a slight rise to it. And that is what I think is going to be closely retested, because here you basically reacted off of the 2 week moving average, not the 1 week moving average, not the daily moving average, but the 2 week moving average. So it looks like we are going to come back down somewhere in this area. So now, what I'm just going to estimate where now I think it'll fall, and it's just going to be a kind of broad range, but not too much between the area of the higher end and the lower end that I think Tesla will finally bottom out at. So when when there's an area of support established or an area of resistance, you usually have several, you usually are stuck in that area for a while before you finally set the bottom or set the top. So, what I'm looking at, you don't see it here on the 2 week chart, but I guess because what I'm going to refer to is this area over here. So, notice on the lows here, it dipped below this structure right here. But remember, these are 2 weeks at a time. So now I'm going to go back to the weekly chart, because I believe we're going to hold that 101.81, but it's going to get close to this 200, this 2 week 200 moving average. So I'm basing my decision on this block right here, because that's really the only area in the past where you pretty much built a base. Now this briefly, right, just briefly, on that 2 week candle and then this 2 week candle, because that's 2 weeks there, you briefly dipped below. But what's more important is, where do you finish? So that finished the bottom on that 2 week time frame. That finished closed at 122.40. And on this little block here, the low was 109.96, and then the next 2 weeks the low was 117. So during this 2 weeks, you dip below, but then the more important thing is, what's the reaction, when you finally finish that time frame that you're looking at. So since we're looking at the 2 week time frame, this closed at 122.40. And some people, when they do technical analysis and they draw trend lines, they use the close of the candle rather than where it actually went at some point during that time. So some people don't count the wicks, and they just put a line basically at the bottom of the body of the candle. But I use the wicks in my analysis, but some people don't. They like to use what's the actual close of the candle. But anyway, so now I'm going to go back to the weekly chart, and I'm going to show how during this period of time you have many weeks where you're just battling right here, which is where I think we're going to get back down to. So now I'm going to be on the weekly chart here, and here is the time frame that I was referring to right here. So this was 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, and then 13 weeks on this candle. You basically get to the top of this, and then you finally break above it. So 13 weeks stuck in this range. So that's 3 months of time where you built a solid foundation, and then you took off, came back down, kind of retested it right here and right here. So now jumping back to where we are, if you look at the close of that candle, drawing a trend line, you're going to draw the line, at the bottom of that candle. Okay, do we hold that low? Most likely not. So I think if we're going to get oversold, then we're going to push down, and then we're going to retest this area, because you tested it right here, but then you broke strongly above it. You clearly broke above it, and on this one here, the low of that 152 was right in the upper range of this. So I think this is the key area that we're going to maybe just barely touch it, or we might push a little bit harder into the middle of it. So on the upper end, I'm going to use 167, and on the lower end, it's 124. So that's the range, 167, 124. So from 167 to 124, if you're patiently waiting, then if you were to start buying at that area, and actually, I'm just going to make one more point, even though I said I like to look at the wicks, but if you take away this particular candle, which that had a big upper wick, and then you just focus on these, which have much smaller wicks, where that was really the battle. That was 155, and on that particular week, it was 153.98, and on this particular week, it was 151. So if you want to use that, take away that one extreme candle, then we're looking at 152, and on the low side, maybe 111. So from 152 to 111, that's $40. So that's about, I don't know, 25% range from the top to the bottom. But anyway, that is what I think we're going to retest. And the way to play it, what I think would be the smartest way to play this, number one, you got to be patient. Number two, in order for things to really change, you need to first see a daily trend change. So back to the daily chart, you had a daily trend change here where you had the low, the high, the low, the high, the higher low, and then you have a higher high. So that was a daily trend change, but then you got to zoom out to the weekly chart, and you stalled out right here. So then if you look out on the weekly chart, then that turns out to be a weekly bear flag, because you need to continue the daily uptrend in order to create space to then form a weekly higher low. But you stalled out at that area. And so in the bigger picture, we just made a weekly bear flag out of that short time frame of a daily uptrend. So I think the wisest thing to do is you just need to wait again for the start of a trend changing, and the smaller time frame is obviously going to change first. You need to change the daily trend before you change the weekly trend. So if you go back to the daily chart, then you could just wait and wait until you see the next daily uptrend, where you get to some low, and then you have a nice strong bounce, and then you come down, you don't break the low, and then you move to a higher high. So that would be the more conservative way to play this, is to just wait for the next daily trend change and say, okay, if that is possibly the bottom, then I can buy. You could buy heavy there and then use the bottom of that daily trend change as your stop out, meaning that if it does not hold and it breaks below that, then you stop out with, a minimal loss rather than just trying to guess right here and start buying without having any level to play off of. You don't have any level to play off of. So, I've been doing this now for 5 years, and I, think I have a pretty good knowledge as to what to look for in the bigger picture. So the daily and the weekly, and then you go to bigger time frames to see, where you think you're going to find support. And so the only area I can find that should act as support is this block right here. So again, if I exclude the high of that candle, that should be somewhere around 155, and on the low side 115. But again, um, the way I like to look at things now is I like to look at how the candles appear on the daily chart and on the weekly chart. So if I just go by appearance, this is telling me it wants to go lower. If I looked at this area here, you have this week and you have this week. Even on that week right there, if I had the knowledge that I have now, but I didn't at that time, that was back in 2022, I would notice that the rate of fall is slowing down dramatically because you have wide body finishing candles at the low, another wide body, long body finishing at the lows. But then on this candle, you have the entire week compressed into just this price range. And then you have one more week, again, pushing lower. But if you notice the real body, the entire body, even if you include the wicks, they're getting smaller and smaller. So it's like you're putting the brakes on. You haven't completely stopped yet, but you are slowing down much more than you were back in these. So another thing that I do in my analysis is I like to look at the final candle, let the candles finish, and then they can kind of give you clues as to if something is changing or if something is not changing. So right now, nothing has changed. And so, in my opinion, we're still going to be going lower and lower from here. So that's my weekend roundup for Tesla. If you like what you see and you're not subscribed yet, please subscribe. Put some likes, put some comments if you'd like, and I'll try to respond. So I'll talk to you again later on during the week.